your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Protecting Yourself or a Loved One from Elder Financial Abuse. Mike, this has become, unfortunately, a growing problem in recent years. Can we give just a little bit of an idea of what we're talking about when it comes to elder financial abuse?
Well, it can run the gambit from anything from, trusted people surrounding the loved one, stealing from them. You've heard the horror stories of caretakers and things like that, or neighbors, taking advantage of somebody who has money and might not know how to manage it anymore, to, the typical online types of schemes where people are posing as the IRS or the police and taking advantage of trust in those ways. So it does run the gambit in terms of the types of frauds that you see.
What are some of the things just that people can be aware of in terms of potentially noticing this before it becomes a real problem?
Yeah, I think, a few items. One, if your loved one who is well off is suddenly nervous about money or constantly not having quite enough money in certain situations, especially if there's cash missing, that's one. I think another one is a change in behavior when it comes to talking about one's finances is another red flag that I've seen with folks, but really is trying to detect, hey, when is somebody too trusting with people out there?
Folks, our guide is titled Protecting Yourself or a Loved One from Elder Financial Abuse, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here, and as we kick things off today, top story that we're going to be talking about is the jobs report from this morning, which came in with 130,000 jobs created for the month of January. The unemployment rate dropped from 4.4 to 4.3%, and quite honestly, when looking through this report, there's very little to be upset about. I think it is a an incredibly solid report all around, especially given the questions that have been building surrounding the labor market and whether there's some weakening and whether the weakening that we've seen the last few years would continue. January on the whole now, I think probably pointing towards the potential, at least, for some green shoots in the labor market, with this report being one of them. But ultimately, Mark, I think this is a really good report, albeit one that still needs confirmation in the coming months that it's not an outlier.
Yeah, there was probably too much cynicism or concern about the labor market given the economic growth backdrop, which was solid. I never fully understood the economic concerns, given that the only thing that seemed to be safe, well, there were a couple of high-level labor market indicators that seemed to be pointing toward weakening, but it wasn't clear that that wasn't just normalization. It's becoming a little clearer. I'm not going to say that hypothesis, if you will, is confirmed by this. We need to see a little bit more, data, as we always say. But labor market doesn't appear to be weak. If anybody told you 10 years ago, 20 years ago, geez, we're at 4-point-something% unemployment and everybody's worried, they would have said you were crazy. Strong economic growth, historically low unemployment, elevated inflation. Unclear to me why anybody would think we needed or need Fed easing.
So, looking at this, when we talk about the labor market, the reasons why, if we talk about the reasons why we've been concerned about it over the last, 6 to 9 months, I know there's been sporadic concerns for the last several years now. Much of that, the first couple of years of the labor market slowing, I think was clearly normalization. But I think that when we look at the last 6 months, the reason for concern there's been a few different items. The first is just the pace of job growth has continued to drop to, net pretty close to zero on a monthly basis. Number two, job openings have continued to drop down such that when we look at the Beveridge curve, which relates the job openings rate to the unemployment rate, we started to get into some dangerous territory there, albeit, not one that actually showed any real problems in this cycle here. Other rates in the JOLTS report, the hires rate continued to tick down, the quits rate ticked down, and so it was this, consistent message that we were getting that hiring was slowing, labor market mobility was slowing, and, that was becoming problematic. A lot of surveys, by the way, you ask people how they feel about the labor market, and they're saying it's harder to get a job. So I think that when we look at this, the positive signs that we've seen this month, by this month I really mean January, from the January data, we have seen continuing unemployment claims go from rising 4 to 6% year over year to being flat for the first few months of the year. We've seen Indeed's job openings data stabilize and start to maybe show a little bit of improvement over a short time period. And now we've got this jobs report. So I think on the whole, you look at it, and it points to the January data being stronger here. Is that enough to, put any of those labor market concerns to bed? I don't think completely, but this is a fantastic report that, at least for this month, says, yeah, things may be getting better, and if we can see some follow-through, that would be a fantastic start to the year for a labor market that's had some questions.
You cited a bunch of economic statistics. From the Fed's point of view, I think there are a couple big things that matter in the models that they use. One is unemployment. The other is vacancies. Vacancies have come down. The number of job openings that firms post have come down, but they're still a lot higher relative to the available pool of labor, relative to unemployed people, than they were prior to roughly 2019, 2018, when something about that relationship changed. It's just not clear to me. It hasn't been. It's still not clear whether this labor market is just sort of normalizing. Look, we never know what the so-called natural, equivalently non-inflationary rate of unemployment is. Is it 4.5? That'd be very low, historically speaking. Is it 5? That'd be closer to the ballpark, historically speaking. That is an unemployment rate that doesn't push up, that doesn't reflect too much demand, pushing against the productive limits of the economy, thus pushing up inflation. As you know, as you could tell by my tone, and I don't want to like not share in your enthusiasm, your excitement, my word, not maybe the one you would choose about this report. But I'm really concerned that the Fed has misread the economy, has overstimulated it. The recent rate cuts effect, by the way, hasn't even made its way through to the real economy yet.
Talk to me about that. Give me a little bit more detail in terms of what you're seeing, because in the broad scheme of things, when we look at 2025 data, the unemployment rate moved up over the course of 2025.
It did.
And on the inflation side of things, we basically saw inflation inflect upward modestly, but mostly on the good side that could be explained away by tariffs. So walk me through the concern that you have, just so our listeners can understand it better.
The way you think, the way economists think about the right policy rate for the Fed is to weigh unemployment and changes in unemployment against inflation. You could substitute vacancies or GDP relative to potential GDP. You're trying to get at, is there slack in the economy? And notwithstanding last year's signs of stalling in the labor market, there were few other signs of slack. Inflation did not fall dramatically. GDP, there was a little hiccup in the second quarter, but we've recovered, and that's an understatement, recovered dramatically from that. Financial conditions are loose. It's easy to get your hands on capital. And related to that, stocks are at all-time highs. It seems very odd to me that anybody would be worried, given that sort of constellation of facts, and thinking about it through a traditional economic lens, seems odd to me that anybody would be thinking this economy needs stimulus, which is exactly what we're doing. Fiscal policy is loosening, tax rebates, tax cuts, monetary policy is eased. I was going to say considerably, maybe modestly is a better term, but it's eased, and it's eased into elevated inflation and very low unemployment. All that strikes me as weird.
I think weird is a fair characterization. Like, again, this is an economy that I do think it's hard to get a handle on it. And look, we clearly have different cross currents that are going on at the moment in the economy, and so I think that in trying to sort through, what is actually happening here, given some of the policy shifts that we've seen in the last year, which are ones, by the way, that no living economist has seen during their lifetime. When's the last time the United States had any kind of significant increase in tariffs, Marc? 100 years ago.
Smoot-Hawley, yeah.
We're talking 100 years ago. So
yeah, but those were well studied. We may not have.
They might have been.
You and I may not have seen them.
It was a different world then, though. Yes, they were well studied for the time period, but the airplane didn't exist. The internet didn't exist. So the impacts can be different, and they can show up differently with different delays and different, substitutions that can happen. I'm not saying that the research on those is inaccurate. I'm just saying it's a different world from then.
No, I'd say price rigidity is price rigidity. I mean, all else equal, tariffs push up prices, full stop.
Which they have. I'm not saying they haven't.
No, I know, and I'm not saying you said that.
What I'm trying to say, Marc, is actually living through something is different from reading about it.
I can't argue with that. Yeah.
The actual the actual impacts in terms of, hey, when we read about Smoot-Hawley, we say, okay, it increased prices in XYZ fashion. Does that happen faster now because the world is more integrated and decisions can be made more quickly? Does that speed mean that it ends up having a larger or smaller impact than these are things that are fundamentally different because it's not the same world as it was then.
Well, but
this was just one example.
Yeah, it definitely never is the same.
Again, I'm just trying to say, on the immigration side, when's the last time the U.S. had net negative immigration, possibly?
Probably the same period, the 20s.
So, again, we
30s.
haven't lived through something like this to know how it may directly impact
I see
the
what
labor
you're.
market.
So you're saying more like it's not like you have to be there observing it, because most people, myself included, are clueless when you're in the moment. But you're saying it doesn't. It's going to play out differently every time. So you can't. I mean, this is a version of what one economist, Bob Lucas, called the Lucas ended up being called the Lucas critique. You cannot take past estimates and apply them to, say,
Yes.
future activity because
Yes.
agents' expectations change. He said it with respect to policy, but you can apply it more broadly. Yeah, I see what you're saying.
So let's take a quick break. When we return, let's talk a little bit about how this, Marc kind of alluded to it, how this jobs report may or may not impact Fed policy looking forward.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Life changes quickly as we age. Technology is moving faster and is creating new risks for families they didn't have to worry about before. One of the biggest is elder financial abuse. Hi, this is Mike from the Armstrong Advisory Group. I'm not talking just about scams, but situations where more online accounts, digital payments, and shared access can slowly open the door to problems. Today, financial exploitation doesn't always look obvious. It can show up through unfamiliar transactions, misused powers of attorney, or pressure from people who already have a role in someone's life. That's why the Armstrong Advisory Group put together a new guide called Protecting Yourself or a Loved One from Elder Financial Abuse. To get your free copy, call 800-393-4001. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com. Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Planning is well underway for the 2026 DAV 5K. The event sold out in record time last year, so head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Marc, let's talk a little bit about this jobs report in the context of future Fed meetings. So the CME has their FedWatch tool that basically allows us to see projected probabilities for future meetings and compare it to what they were in the past. So just as an example, yesterday, if you looked at the upcoming meeting for March 18th, there's a 20% chance of a rate cut happening then, 79% chance of no cut. Today, in light of this new data, only a 6% chance of a rate cut, 94% chance of no action. If we go out further, let's look at the July meeting just as an example. If we looked yesterday, there was only a 15% chance that rates were still where they are today. Now it's up to a 25% chance that rates are still where they are today by the end of July. When we go to the December meeting, previously there was only a 4.8% chance that rates were still where they are today. Now it's up to a 7.1. So overall, what's being priced in here at this point is basically, hey, if there are going to be rate cuts, there's not a huge shift when you look at later in the year, but it's basically saying, hey, if there are to be rate cuts, they're going to have to start later than originally projected. And you still do have, when you look at the probabilities in the aggregate, 2 cuts being priced in this year. I will say I'm in complete agreement with you in that, look, if we get more reports that show what we saw in this report here, you are not seeing, I will go so far as to say you are not seeing rate cuts by the end of the year. You are seeing rate hikes by the end of the year.
Yeah, I'd like to put a simple question to these people who think they're going to be rate cuts this year, given what we know today. Are you crazy?
I don't think, no.
Go ahead.
Listen, I don't think they're necessarily crazy.
What are they? But they're making assumptions about the future of the economy and ignoring what we know factually. What is concrete? What is concrete is that inflation is elevated. What is concrete is that unemployment is epically low by historical standards. What is concrete is that we're pouring a lot of fiscal and monetary, especially if you count those MBSs that the administration told its people over at Freddie to buy. We're lavishing stimulus on the economy at a time of elevated inflation, very low unemployment, and massive deficits. You'd have to be predicting something that the rest of us don't have the gifts to foresee, some kind of economic a calamity or unexpected dramatic slowdown.
Isn't the thing that they could be predicting, again, hear me out on this, because I'm one of the people. I don't expect. I wasn't expecting cuts this year.
I know.
But in the context of, let's look at the unemployment rate, and specifically the unemployment rate over the last year or so. If we go back to January of 25, and we say, okay, where was unemployment then? We were at 4% even. We then rose, to get up to 4.6% with that November report initially. That's subsequently been revised down to 4.5 with the updates that we've seen. But you saw unemployment rise by 0.5% last year.
Mm-hmm.
Given the continued weakness that we'd seen in the labor market and the fact that until the last month of data, there didn't seem to be any meaningful turn that could be happening, and even this, it's still early in my opinion. Is it something where someone could reasonably say, unemployment's gone up by 0.5%, we're getting into the dangerous part of the beverage curve where unemployment starts to ratchet up more rapidly in more exponential fashion, and as such, rate cuts in the fall were warranted?
You could say that.
Because with the dual mandate, unemployment was moving up more rapidly than inflation was. And so the Fed could make a judgment call to say, yes, inflation is a problem, but unemployment is the more urgent, more imminent one. And so let's try to address that before looking at the
You would have
inflation
to
piece.
explain why your estimate of the natural rate is outside the bounds of virtually every of all historical experience. You would have to, and I know there are plenty of widely respected economists, far more accomplished than, say, I am, PhD academics and people who thought rates needed to come down. I respectfully, using in some cases the textbooks and papers that they wrote in my reasoning, came to the conclusion that, wait a minute, you might be wrong about your estimate of the natural rate. You don't, and sometimes we throw around the term natural rate. We're referring to GDP, potential GDP. Sometimes we're referring to the rate that the Fed should set the Fed funds rate at. I'm referring here to the rate of unemployment that is consistent with stable inflation. That's one way to define it, and good for our purposes. How do you know that it should be 4.5? You've got to make a case for that, and don't give me some AI productivity story. Sure. Perhaps tariffs and all the restructuring of the economy that's going on under this new administration, and you may like it, you may hate it, but you can't deny there's been some pretty dramatic, and it's ongoing, economic restructuring. If we're going to look more like the economy of the 50s and 60s, the natural rate should probably be closer to what it was then than where it was in the late 90s and even more recently, which suggests to me somewhere in the 5 to 6% range if you want non-inflationary unemployment. I'm not saying I'd hang my hat on that, but I don't get why. Maybe because maybe they're just commentators throwing something out there. They're not thinking rigorously. If you think it through, go ahead.
And if you want the evidence that inflation could potentially evolve into the bigger problem as we go through this year, take a look at the wage growth data from the last 3 months. 2 of the last 3 months now, printing 0.7% month over month average weekly earnings gains. That's an 8.5% annualized clip. That is freaking hot. Now, the other one did show a modest decline, but if you start seeing anything that looks like that, you've got problems because then employers need to raise their prices in order to cover those wage gains, and that is something to watch out for if this continues. Quick break, Wall Street Watchers next, followed by Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches, in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Life changes quickly as we age. Technology is moving faster and is creating new risks for families they didn't have to worry about before. One of the biggest is elder financial abuse. Hi, this is Mike from the Armstrong Advisory Group. I'm not talking just about scams, but situations where more online accounts, digital payments, and shared access can slowly open the door to problems. Today, financial exploitation doesn't always look obvious. It can show up through unfamiliar transactions, misused powers of attorney, or pressure from people who already have a role in someone's life. That's why the Armstrong Advisory Group put together a new guide called Protecting Yourself or a Loved One from Elder Financial Abuse. To get your free copy, call 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699, or request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets pulling back after opening the day in positive territory as Wall Street reacts to a stronger than expected January jobs report, where 130,000 jobs were added last month, above expectations of 65,000. The unemployment rate also ticked lower to 4.3%. Right now, the Dow is off about 1/3%, S&P 500 down about 1/4%, NASDAQ down just over 0.5%, Russell 2000 selling off about 0.9%. 10-year Treasury yield is up 2 basis points at 4.168%. And crude oil up over 1.5% higher, trading above $65 a barrel. Kraft Heinz announced this morning it is pausing work on a previously announced plan to split the company, stating that many of the company's issues are fixable and within its control. Shares in Kraft Heinz are flat at the moment. Meanwhile, shares of Warner Brothers Discovery edging higher after the Wall Street Journal reported that activist investor Ancora built a near $200 million stake in Warner and plans to oppose its deal with Netflix, saying Warner failed to adequately engage with Paramount's rival offer. Netflix shares down 2%. Elsewhere, Moderna falling 11% after following news that the FDA refused to review the drug maker's application to sell a new seasonal flu vaccine. Humana stock down 2% despite the health insurance company beating on both profit and revenue forecasts for its most recent quarter. Zillow sinking 17% after the home listing platform reported a lower than expected EBITDA range for the first quarter, and shares in toy manufacturer Mattel plunging 25% after it missed earnings and revenue expectations for the fourth quarter. Both Citigroup and JP Morgan Chase also downgraded the stock. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
And we are now joined by Todd Lutsky for Ask Todd. Get your estate planning questions ready because this is your chance to ask them to Todd live on air right now. Phone lines are open at 888-205-2263. So get calling early and often because we can usually get through 2 or 3 questions. Once we start getting into 4 or 5, then it's, oh boy, I don't know if we can handle that. So again, the number is 888-205-2263. You got estate planning questions? Todd Lutsky is going to try to answer them right now. Again, that phone number is 888-205-2263. Mr. Lutsky, how are you doing?
I am never better. And you?
Good. I was at the circus the other day.
Yeah, you like that?
Not a great show. The lion ate the tightrope walker.
Oh, yeah?
Yeah, it was a well-balanced meal.
I bet so.
Yeah, not good. Not good. Todd, I want to talk to you. Let's say that someone has not done any estate planning. They've never met with an attorney. They're like, no, I didn't need it. I don't need it, but, well, I guess I do need it because everyone at some point needs an attorney.
Yeah.
What should someone expect as they go through the estate planning process? Like, what are the things the boxes that you want to see that estate planning attorney check as they're going through?
Yeah, this is really important. The whole idea, I think, behind this question, Chuck, if I may, is how do I get started? How do I kick off my estate planning, right? What do I think about? What are the checklists, if you will? So, a couple of things. You first, talk about, how old am I? Because age could impact the type of plan that we do, right? So if I just throw out like 60 and over, I might say, well, I want the basics, of course, taxes, probate, bloodline planning. Those are always important because, everybody dies, but not everybody goes to a nursing home. But if I'm 60 and over, I might add that to my checklist before I get started. So, okay, I got to think about that. Next, versus, let's say I'm 35 with young kids. Well, probably nursing home planning is not on the to-do list. Now, next, valuation. How large is my estate, right? And when I say valuation, it's not just valuation, but maybe at the same time you're thinking of valuation, you think about what's included in my estate. What do I have to value? So things like real estate, rental properties, vacation homes, yes, life insurance, you don't think about that. Yes, IRAs and Roth IRAs and 401ks and investment accounts. So all of these things you need to really think about as what I need to value, then value it. And again, if I'm, way up there, I have that $15 million is the federal estate tax exemption or $30 million. Well, now I know I'm in revocable trust world and maybe even gifting trust world, thinking about things like that. If I'm somewhere between the $3 and $5 million range, which there's a lot more of those people, well, now I'm thinking, based on my age, what kind of planning, revocable or irrevocable, but more of a basic estate planning. Do I have minor children? Do I have children? Do I have a family dynamic problem? Am I a second marriage? So those are all things you need to think about, in terms of the planning, especially second marriage, folks. If you're a second marriage or in a relationship and you're not married, think about how you want to leave things and how you want to take care of each other. So those are all basically items to put on a checklist when you're getting started.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. Again, we've got space on the phone lines at 888-205-2263. That is the number to call to ask Todd your estate planning questions live on air right now. 888-205-2263. We're going to take a break here, but when we come back, we're going to get right to your questions with Todd. Again, 888-205-2263 is the number. Quick break, then your calls when we return.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
As you get closer to retirement, making sound decisions to protect your assets becomes even more important, especially with increasing cases of elder financial abuse. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A Bloomberg report from last September notes that older Americans are losing an estimated $28.3 billion to exploitation. Scam calls and fraud emails are issues to be aware of, but there are other warning signs that may not be easy to spot. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse. In it, we discuss a variety of concerns to watch out for, as well as steps that you can take to stay ahead of potential problems. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001, or you can request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets is the most important part of a sound estate plan. Cushing & Dolan's new guide called Back to the Basics, a complete guide to an estate and asset protection plan, can help. Learn how to avoid probate and address your estate tax concerns. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Talking with Todd Lutsky here. Still room on the phone lines for your estate planning questions at 888-205-2263. That number again is 888-205-2263. Todd, let's go with first caller here, Steve in East Bridgewater. Steve, what's your question for Todd Lutsky?
Hi, guys. Thanks for taking my question. I was wondering about the difference between a Social Security number and an EIN number for a trust. Is there any advantages to using an EIN number over a social?
So it's not about advantages, it's about need. Okay, so unfortunately, it's a great question because people get confused. Even accountants can get confused by this. So it could be a tax difference, but let's start with Social Security. If you're setting up a revocable trust, that by the very nature of the fact that it's revocable means that it's a grantor trust for income tax purposes. And it means that you do not need a tax ID number. Okay, you simply would take your brokerage account, your bank account, and let's say retitle it, like to what? Call it the Steve Family Trust or whatever you're calling it. That would be the name on the account, and you would use your Social Security number, and you would file no tax return for that trust. Everything is picked up on your 1040. If, on the other hand, you're doing like a Medicaid irrevocable trust or even a gifting type trust, an irrevocable gifting trust of sorts, or a spousal lifetime access trust, which is irrevocable, then generally we try to draft those or design those as grantor trusts, but because they're irrevocable and oftentimes the donor and the trustee are different people, then you need to get a tax ID number. And when you open up the account, again, might be called the Steve Family Irrevocable Trust. Well, you can still retitle your bank account or your brokerage account into that trust, but then you would use an EIN number to set up that account. Why? Because now that trust will have to file its own income tax return under that EIN number. And that's a Form 1041. But as you said, is one better than another? Well, in this case, as long as the irrevocable trust, even though using the EIN number, is a grantor trust, it means that you, the donor, Steve, are treated as the owner for income tax purposes. And therefore, you're still going to pick up all of that income, interest, dividends, rent, if you put a rental property in there. You will pick up that income on your personal 1040. The only difference is the trust needs to file a 1041 to pick up the numbers, but then it kicks out, a letter to you with all those numbers on it saying it gets picked up on your return, and the tax at the trust level is 0. So it doesn't necessarily change the amount of taxes you're paying. It just changes the way you file it. And you also file it because we want to respect the entity when it's irrevocable for nursing home purposes and the like. So seemingly a simple question, but definitely a long-winded answer, but you needed to understand the difference between the two. Hope that helped. Folks, that's part of it. When you're doing your planning, that's what the guide is about, back to the basics. One of the things in the guide is it helps you kick off your idea of getting an estate plan done, but it talks about these things. It talks about what to look for, like we talked earlier, age, value, types of assets, family dynamics. And then it talks about basic documents, will, healthcare, power of attorney, little things that you need to know about. Then it talks about how an irrevocable Medicaid trust works, getting the ID number, setting up the accounts, what happens when you die, how it works when you're alive. It's basically an estate planning engagement letter for a client, and all the assets are listed on here. You could just put your assets in and see if this plan works for you. If it doesn't, at least it helps you get started in your estate planning world. Back to the basics, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com. And for more information, visit our Instagram page, Cushing Dolan PC.
Todd, got another one for you here. Let's go to Shannon in Belchertown. Shannon, you're on with Todd Lutsky.
Hi.
Hello. How can we help?
I'm just curious as how much all this would cost to start setting all this up.
So, again,
is there a ballpark figure?
Well, it's kind of hard to say because I don't know what we're doing, right? I work anyway on a flat fee, and I hope I can tell you that when you go to other attorneys, try to make sure that at least you're going to get a flat fee quoted for you. And at the end of our initial meeting, for everybody listening, once I know what we're doing, then I can give you that flat fee number. Like, are we doing a will, a healthcare proxy, a power of attorney? Are we doing one revocable trust or two? Are we doing an irrevocable Medicaid trust? Are we doing gifting trust? Unfortunately, all of those things result in a different cost. So I think the best thing to do is go in, get that free consultation, and then get a flat fee, and then you'll have a good idea of not only what you need, but how much it costs. So I hope that helps a little. Just a little hard to answer an open-ended question like that.
Todd, I have one more for you here. Let's go to Rick in Falmouth. Rick, what is your question for Todd Lutsky?
Hey, good morning, Todd.
Good morning.
2 years ago, you set up an irrevocable trust for my wife and I, which is great.
Okay, thank you.
I have a high-yield savings account that is in the trust.
Mm-hmm.
Can I withdraw the interest that it generates and use that as income?
So great question. So these are these irrevocable trusts that we've talked about a lot on the air, folks. Everyone that needs to understand how this works in case they have it. So in this case, the answer is emphatically yes. So these are actually called irrevocable Medicaid income-only trusts. And so what that means is any interest, dividends, or let's just say you happen to have a rental property, you put it in there, rent, income. Normally, if you read it, it says income shall be paid to the donor or the donor's spouse. That's you, Rick, and your spouse if you're married. So yes, the income would come out to you. And I know you don't even have to deal with the trustee. So if this is something that you're saying going forward, I've got a high yield savings or I've got an investment account in there, and you know what? It's time that I want to start living on that income to supplement my Social Security or my pension or whatever else is coming in. Can I do that? Yes. And the way you can do it is talk with your bank or talk with your financial brokerage house and say, please set up the account as an automatic transfer. So I want every month the income to be automatically distributed from the trust account to my personal bank account, which you should have bank accounts outside the trust, generally ones that receive your Social Security, your pension, things like that. Just have it automatically transferred. That way you don't need to bother the trustee, who likely is not you. So you would, it'll just automatically happen. So hope that helps. And folks, just to expand on that a little bit, right? Because we only have a little bit of time left. What if I have a rental property and I put it in one of these trusts? Because there might be clients that have done that, or individuals who have done that. Well, the rent, make sure that's being deposited into the bank account in the name of the trust to receive the rent, and then that's income, right? Just because it came in as rent, it retains its character as income. And so then that particular bank account receiving the rent can also be set up as an automatic transfer. So the rent comes in and automatically hits your personal bank account. I say this because a lot of times people say, oh, it's a lot more complicated when I have my rental property in the trust. When you back up and think about it, it's really not, because you're still making only one deposit, right? If you didn't have the trust, you'd collect the rent, put it in your bank account. Now you collect the rent, deposit it into a trust bank account. One deposit, one transaction, and it automatically hits your personal bank account. So definitely a good idea. Great question, and a lot of control for you over these irrevocable trusts.
Mr. Lutsky, appreciate you joining us today.
Yeah, always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated.
Still a bunch to come as we head towards the second hour of the show. We'll talk about the latest companies getting torched by the AI trade. We'll talk a little bit about the state of the dollar. Also, credit card debt. How much do Americans have now? Is that good? Is that bad? Does it matter at all? We've got all that coming up, plus a whole lot more as we get into hour number 2. So make sure you stick around because we're just getting started here.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us develop a plan to help you secure your financial future. Again, that's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches, in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information. And get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a new guide available this month titled Protecting Yourself or a Loved One from Elder Financial Abuse. Mike, when we talk about some of the new schemes that we're seeing that are unfortunately taking advantage of seniors, what are some of the more common ones that have popped up in recent years and months?
Yeah, I think whenever you see new emerging ones popping up, it's because something is getting a lot of attention in the first place. So, for instance, we have seen the emergence of more and more crypto-themed Ponzi schemes or frauds that are trying to convince somebody, for instance, that, hey, invest your money here and you can see massive returns over a short period of time. The person viewing it might have already heard about how certain crypto investments had returned a lot of money over a different period of time and assumed that it is legitimate when in a lot of cases it might not be. The other ones that you see, though, I mean, they run the gamut, but they often try and take advantage of someone's trust in an institution. So that could be trust in your bank. It could be trust in your local government. It could be trust in a financial institution like a custodian where you assume, hey, I've been afforded these protections when working with a major investment custodian or bank, so I'm sure I will be if I sign up for an account here or there. And while this is most common in seniors, it can take place in other places too.
Folks, the guide is titled Protecting Yourself or a Loved One from Elder Financial Abuse. The way to request it is by calling 800-393-4001. You can also request it at armstrongadvisory.com. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here. And kicking things off today, we had a jobs report that came out at, it was 8:30 this morning Eastern Time. And jobs report much better than anticipated. 130,000 jobs created for the month versus expectations of 40 to 70K. Unemployment rate dropped from 4.4 to 4.3%. You go through, again, kind of all the big data pieces in here. And hard to find bad ones. The household data showed an even greater number of jobs added, 528,000. Remember, the household and establishment survey don't often add up. They're not always the same. Labor force participation rate improved from 62.4 to 62.5%. So, that makes the unemployment rate drop even more impressive. Other things that you saw, aggregate payroll growth now running back up around 4.8% year over year after dropping to 3.7% last month with the new updated numbers. So overall, good jobs report, but one that quite honestly, with some of the wage growth that you're seeing underlying it, if you were to see a few more of these, come through in the next couple months, it really does then tilt the balance of risks in the, remaining 2/3 of the year to, hey, inflation could move higher if you start seeing weekly wage growth numbers coming in consistently at 0.7% month over month. That is not just hot, that is very, 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 very hot and would represent a material shift that could become problematic. This is 1 month. Let's not overreact to it. Let's see how things go. So overall, I think this is a very solid jobs report that if you see more of them, you're not getting any more rate cuts, and you might start getting rate hikes.
Yeah, I think that's where a reasonable analyst should land on this. We had a couple very strong quarters of GDP growth, the second and third, if I'm remembering correctly. In 2025, we probably finished the year very strong. There were some weaknesses in some high-level employment data. You pointed it out earlier in the show. But as it turns out, those may have been. Now, that's a tricky phrase to use because we don't know how it's going to turn out. But if this persists, those were a blip. The economy is unquestionably running hotter than its potential. Said differently, well, actually, I don't know that I would say that any differently. Economy's running too hot, whether you look at GDP. And arguably, if you look at unemployment, too, unemployment in the low fours is probably unnaturally low. That's probably below the threshold at which inflation starts to rise. Said differently, the Fed has overstimulated the economy. It's growing demand too fast relative to the growth in supply and the productive capacity of the economy.
So ultimately, I think this is the thing that we're going to watch the next couple months. Is this turn that's happening in the labor market going to continue, or is this, a 1 month blip in the data for whatever reason? I don't know. We'll see what we get. But how does this potentially impact the balance of risks on, that inflation versus unemployment question that the Fed has over the rest of the year? It's a big one, especially with a new Fed chair that's going to be incoming.
How much of an unemployment, a low unemployment fanatic, and that sounds cruel because anybody out of a job creates an unemployment crisis in their world. But it's unreasonable to want to push the economy below the mid to low fours, and I'm just basing that on recent experience of what seems to be sustainable late 2010s and going a little farther back, late 1990s, though there were other things going on then. What kind of fanatic, forgive me, but wants to push unemployment below 4% when inflation is elevated? That's clearly I say clearly because inflation it was very high when unemployment was below 4%. That's why I amplify that with clearly. That's clearly not sustainable, and people were very upset with elevated inflation.
So I was going to talk about something else to kick this hour off, but it's worth digging in on this a little. No. No apologies here on the Financial Exchange.
Okay.
Let's dig in a little bit more on this in a couple respects. The first is, there's two things that I want to talk about on this. The first is, hasn't the messaging from the Trump administration in the last 6 months or so been, we're going to run the economy hot?
Yes, it has. Sound familiar, Joe Biden?
And so ultimately, if they're trying to, which, by the way, all of the policy making indicates that that's where they're going when we talk about, the big, beautiful bill and the additional, stimulus that's going to kick into the economy this year. It makes sense from that perspective. So they're telling you that they want to run the economy hot. There are signs that the labor market may be turning and starting to hotten up, if we will, and I will. And so I am a big believer in, hey, when someone's telling you what they want to do and they're actually doing it, like, okay, you should probably believe them. The other piece that I think has the potential to make this hotter from an inflation perspective, if this turn in the labor market is real, if labor demand turns up in a world where labor supply is flat to contracting, you've got big problems on the inflation side of things.
Well, yeah, just and generalize that. If demand, just think of overall economic demand and think of the Fed as controlling it. The problem in 2021, the problem in the 70s too, in addition to the oil price spikes in 73, 74, and again in 79 that exacerbated inflation, the Fed thought the economy could grow faster than it was growing, and therefore they could keep interest rates lower than they would otherwise. They misread the structure of the economy. It's like overfeeding your dog or cat. You don't understand their activity levels properly. You're pushing their calorie intake beyond what's necessary to keep their weight stable. It's that's not my best analogy, but a pet owner kind of gets that. You gotta find the right diet, find the right dosage of food, whatever, relative to your pet's activity. The Fed's trying to do the same thing. It's how much do we feed this big dog, the economy? Well, if I don't want it to gain weight, I don't want it to lose weight either, where weight is analogously inflation here. And that's always changing.
So I'm very much, of the opinion, look, you already had this demographic tsunami that was coming with baby boomers retiring, and there aren't enough 22-year-olds to replace all of the 62 and 72-year-olds that are retiring. It's a math problem, and it's not a complicated one. It's simple subtraction. If X is greater than Y, then you have more people leaving the economy than coming in, and that's where we start. But then when you throw in the immigration piece as well, it's one where, hey, now your potential, relief valve for labor supply is being closed. And this has the potential, if labor demand ticks up in any meaningful fashion, you've got an inflation problem, because if I am a restaurant, and Mark, if there's anything that Italians know about, it's restaurants. It's like every one of us has at least like 6 cousins and uncles who are, in some form of the restaurant food chain, pun intended. And so ultimately, you're running a restaurant. Your margins as they are, if you're successful, are like 4%. They're not good. And now your labor cost goes up because, Johnny got a new job working down the street, and so you got to bring someone in who's new, but you got to pay them more. And so you're sitting there like, okay, this just ate all of my profits. I got to raise prices. This is how inflation happens. People are like, oh, what is inflation? Ultimately, it's companies deciding to raise prices. And when enough of them do it, and enough of that is supported by the demand side for people to pay for those price increases, that's why inflation happens. And so this is the dangerous thing that we have to watch for and see how it develops. Let's take a quick break. When we come back, we're joined by Luke Kawa from Sherwood News. We're talking about why the tech world and the finance world have very different opinions on artificial intelligence right after this.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is The Financial Exchange Radio Network. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches, in crystal-clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com. Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As you get closer to retirement, making sound decisions to protect your assets becomes even more important, especially with increasing cases of elder financial abuse. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A Bloomberg report from last September notes that older Americans are losing an estimated $28.3 billion to exploitation. Scam calls and fraud emails are issues to be aware of, but there are other warning signs that may not be easy to spot. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse. In it, we discuss a variety of concerns to watch out for, as well as steps that you can take to stay ahead of potential problems. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001, or you can request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women, taking the lives of 1 in 3.
That's more than all forms of cancer combined. For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
As promised, we are now joined by Luke Kawa from Sherwood News. Luke wrote a piece last week. It's titled, Why There's a Huge Vibe Difference Between Tech and Finance on AI. I immediately sent it to Tucker and said, Tuck, you got to get Luke back on the show. And Tucker was nice enough to reach out. So, Luke, appreciate you joining us today.
Always my pleasure, man.
Luke, what is this huge vibe difference that you're describing in this piece?
Yeah, I think to encapsulate it, you can turn first to the markets, and you can say AI's been negative for the stock market this year. If you look at pretty much every day, there is a rolling series of industries that are seemingly at risk of being disrupted by AI. And it doesn't matter. Like, I think people talking about, the idea that you're not going to vibe code your way to this kind of next great Salesforce or big app. Like, that doesn't matter. What matters is, might you in 10, 15 years? And if that's the case, then that's something you have to worry about now. So it's been kind of negative for a rolling series of industries, from software to ad tech to gaming, insurance even recently, brokerages. So that's the kind of the easy part, the markets part. The other part is something that I'm happy I got to write about it before this viral post on Twitter from Matt Schuber that was effectively entitled "Something Big is Happening." And I think that post kind of encapsulates what I was trying to get at pretty well. And it's that everyone in the tech space who is very high touch with AI tools is going that, like, hey, with some of the recent progress by Claude and from some of the newer Chat GPT iterants, some of the new tools developed, that like this is a real shift, they're arguing, in terms of the way they are working day to day has fundamentally changed. And they're saying that, hey, we're on the bleeding edge of it. We're seeing it first. It's coming for you, and it's going to be pervasive. So there is this gap between the market going, okay, like AI's kind of zero, perhaps negative sum, and the tech guys going, this is so fundamentally transformative. And there are ways to kind of explain away the gap, but it's a big one. I think it warrants kind of monitoring right now.
Yeah, I've spent the last couple weeks now kind of digging in more on this and kind of seeing like some of the actual functionality, and I've gotten to the point now where I've kind of had my aha moment, or like my oh crap moment, like depending on how you want to look at it. And you mentioned, look, like no one's going to like vibe code themselves like the next Salesforce, like just for their personal use. But here's the middle ground that I think is interesting to explore. All these tech companies have been laying people off left and right over the last couple of years. What's to stop 3 engineers from one of them from saying, hey, we can vibe code the next one and start a company and sell our product at a fraction of the cost of the legacy ones on the market and eat into market share, and that impacts those companies as well.
Yeah, I think the kind of the middle ground, or the part that software companies are doing, they're obviously incorporating AI agents themselves. I think what you're getting at is, how can you effectively disintermediate at a much leaner scale? And the kind of the moat that a lot of established software companies have is the legacy data, and the fact that it's been there, it's all been there. So the kind of the workaround, or the kind of justifying your existence, would be, hey, in the same way that you rent for a seat, or you pay for a seat in terms of software, well, you're going to be paying for access and performance to that data and that set. So that's a way of trying to like extract a rent, so to speak, from the legacy data set, even as kind of AI agents, whether that's from kind of other existing companies or from new entrants, try to arb that away. I think then the difficulty is, well, how big of a rent can you get before you just decide, okay, it's worth reinventing the whole kit and caboodle? Like Jensen Huang said that, nobody's going to that AI agents are just going to use tools that are there. They're not going to reinvent hammers and chainsaws. The chainsaws one got me really worried. But, I think at a certain point, if the margins are big enough, high margins are a big kick me sign that says compete and go in there and take it.
And this is the whole thing, which is, software has had this wide moat for a while in these areas because you needed, hundreds or thousands of engineers in order to build the stuff, and then you need to sell it and hopefully get to profitability when you get to scale. But once you get there, you've got these fat margins that you just sit on because it's so hard for new entrants to come in. If those, we're talking about the potential commoditization of that software space, are we not?
I would say, completely and utterly, and that's something, hey, I write a lot about things that go up and down on charts. I am not immune from this commoditization, and I think
all of us are going to get hit.
Yeah, yeah, all of us in different ways. I think it's some things I'm trying to keep in mind and remembering is, hey, like the worst AIs that will ever be used commercially are being used now. They're probably going to get better, and what do I have to offer that is kind of independent of things that are kind of easily commoditizable? That's not something I have an easy answer to on the day by day, to be quite honest. And I think that's kind of reflected in what we see broadly in markets is there's margins that are getting attacked. Nobody knows whether this is going to be OpenAI, Anthropic's kind of net profits over time, or whether this is something that really, I would say, as the internet establishes itself as more of a broader consumer surplus over time. So that's a big TBD.
It's going to be wild, and I'm now on the train that this is going to happen faster than any of us expected. The last month or so has really changed my thinking in looking at this. Luke, I appreciate you joining us. I appreciate you writing this piece because it was one of the ones that got me thinking, really. And looking forward to talking again soon.
I appreciate the feedback, man. Thanks a lot.
That is Luke Kawa from Sherwood News talking about what we are seeing in artificial intelligence at the moment.
All right, time for trivia here on the Financial Exchange. And TV and movie star Jennifer Aniston turned 57 years old today. Before her famous role as Rachel Green in the popular sitcom Friends, Jennifer was actually offered a role on another NBC show before choosing Friends back in 1994. So our trivia question today, what show did Jennifer Aniston turn down before accepting her role on Friends? Once again, what show did Jennifer Aniston turn down before accepting her role on Friends? Be the sixth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the sixth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mark, continuing the AI chatter here, a couple pieces, one from, both from Bloomberg, talking about, basically anything that Wall Street views that could be in AI's crosshairs is basically stocks are just getting arbitrarily dumped. Yesterday, as an example, you had a case where a bunch of finance companies, Charles Schwab, LPL Finance, a bunch of the big, custodians in the finance space, getting hit because Altruist Corporation rolled out an AI-based tax strategies tool that they said could automate a lot of that process. And so pretty much what you're seeing right now, and again, I don't know how much of this is right or wrong, but it's sell first, ask questions later when businesses are viewed to be under threat by artificial intelligence.
Yeah, I think one way to think about it, if you're concerned about your own role, and to your and Luke's point, I guess we all should be to a degree, is if you wrote down what you did, could somebody just following those instructions execute successfully and perform your job? I.e., does it require any judgment and any experience at all? If the answer is no, you're probably vulnerable in the short term. Would you agree with that, Chuck?
Yes, and the other differentiating factor is, does it require anything in the physical world or anything relationship-based at this point?
Yes.
If it requires those things, you have more time.
Yeah, I would. Yeah.
If it doesn't,
right.
There's a rapidly ticking clock.
Well put.
And I don't know whether that is 6 months or 18 months, but it's not a decade. It's like this is now coming faster than we thought. And as Luke said, look, let me take a quick break here. When we come back, I want to dig in more on one thing that he said. We've also got the trivia answer in Wall Street Watch, too.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please please visit dav5k.boston. That's dav5k.boston.
Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal-clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Life changes quickly as we age. Technology is moving faster and is creating new risks for families they didn't have to worry about before. One of the biggest is elder financial abuse. Hi, this is Mike from the Armstrong Advisory Group. I'm not talking just about scams, but situations where more online accounts, digital payments, and shared access can slowly open the door to problems. Today, financial exploitation doesn't always look obvious. It can show up through unfamiliar transactions, misused powers of attorney, or pressure from people who already have a role in someone's life. That's why the Armstrong Advisory Group put together a new guide called Protecting Yourself or a Loved One from Elder Financial Abuse. To get your free copy, call 800-393-4001. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Some choppy trading on Wall Street to this point as investors react to a stronger than expected January jobs report where 130,000 jobs were added last month, above expectations of 65,000. The unemployment rate also ticked lower to 4.3%. Right now, the Dow is only off by 46 points. S&P 500 edging 2 points higher. NASDAQ down about 1/3%. Russell 2000 selling off 1%. 10-year Treasury yield is up 1 basis point at 4.162%, and crude oil up nearly 2% higher now, trading just above $65 a barrel. Kraft Heinz announced this morning it was pausing work on a previously announced plan to split the company, stating that many of the company's issues are fixable and within its control. Kraft Heinz shares are edging higher. Meanwhile, shares in Warner Brothers Discovery are modestly higher after the Wall Street Journal reported activist investor Ancora built a near $200 million stake in Warner in plans to oppose its deal with Netflix, saying Warner failed to adequately engage with Paramount's rival offer. Netflix, by the way, is down by over 2%. Elsewhere, Moderna stock is down 8% following news that the FDA refused to review the drug maker's application to sell a new seasonal flu vaccine. Lyft stock is dropping nearly 15% after its fourth quarter ridership numbers disappointed. However, its CEO said consumer demand remains strong, and shares in toy manufacturer Mattel are plunging 24% after it missed earnings and revenue expectations. Citigroup and JP Morgan Chase also both downgraded the stock. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: what show did Jennifer Aniston turn down before accepting her role on Friends? That would be Saturday Night Live. Jason from Kingston, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Jason. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Federal Reserve Bank of New York out with their latest quarterly report on Americans and their household finances. What they show is that credit card debt has now topped $1.28 trillion. That's a 5.5% jump from the prior year. Remember, inflation's running about 3%, so it's about a 2.5% jump in real terms. That's the one that matters. And it matters also, hey, how much of this is being rolled over each month and not paid versus how much is being paid off? Because ultimately, if you have that credit card balance but you pay it off every month, it's not really a problem in any way, shape, or form, at least not in your current state. So I always, we get these, and, it's always good to, poo-poo them and be like, here are the things that you need to look at. Is there anything that's actually concerning when you look at the data from this most recent quarterly report, Mark?
Hard to say. I don't know. I don't know where to put it. If you're a researcher, maybe this is an input into a model of yours that forecasts spending. Maybe this is an input into a model that forecasts growth. Maybe both. Those two things are related. I don't use it, so I don't want to say something really stupid. Only someone who used the data and knew what it was a useful input to would pick up on it. But it's hard to say, Chuck, right? Like, it doesn't feel good. Oh, geez, debt grew in real terms. That can't be good. No, I guess not, unless people are, one economic explanation is, well, people expect future earnings growth to be higher. We keep hearing about the productivity miracle of AI. That may eventually make its way into wages. Look, that's two ifs. So first it happens, then workers benefit, and maybe people are spending. I don't know, this is so weak, but I'll throw it out there. Maybe they're spending in anticipation about that. I don't think anybody would take that seriously, though.
The place that I tend to come back to is the household debt service ratio. Basically, what percentage of your disposable income do debt payments make up? Right now, Q4, it's about 11.6%. That's the most recent data that is released here. In Q4 of 2007, right before everything fell apart in the financial crisis, it was 15.8. And for most of the last 45 years, we have the data set I'm looking at here goes back to 1980. It was generally between 12 and 14%. That's kind of where it tended to live. So 15.8% right before the financial crisis was, significantly high compared to where it had previously been. 11.6%, you're basically at the same place that you were at for most of the 2011 through 2019 period. I'm just not convinced that Americans are borrowing too much in the aggregate. Again, I'm not saying that there aren't problems, but when you look at the fact that, unfortunately, most of the spending is now done by that top 5 to 10% of Americans, and so as long as they can continue to service their debt, the struggles of, the bottom 50 to 60%, they don't necessarily impact the U.S. economy in the same way that they may have previously. And, it's not good. This is not good from a societal perspective that such a large portion of Americans are really struggling to pay the bills, and somehow it still doesn't, influence the economy enough. But it's kind of where we are right now. Any thoughts, Mark?
No, I think you make a good point. I wonder about debt service relative to interest rates. Debt service includes mortgages, right? And longer term.
Yes.
Okay, so you've got some of that was refined. Some of that represents mortgages taken out at rates that were artificially low because the Fed was effectively capping them for a while. I don't know, Chuck. I don't know.
So, yeah, we'll see where this goes. Folks, we are talking about the overall, health of the U.S. economy and the health of personal finances here. And if you've got questions about heading into retirement and your personal financial situation, the Armstrong Advisory Group has offices all throughout the New England region to help you answer those questions and figure out what the path forward is for you financially. You can head over to our website at armstrongadvisory.com. Once you're there, there's a button that says Get Started. You can click that and schedule a time to speak with someone from our team. Doesn't cost you anything to sit down and chat with someone, and again, it can help you to get a better handle on what it is you're doing financially, even if it's just getting a second opinion on what it is that you're already doing. So whether you have no idea what's going on financially with your situation, whether you've got a plan and just want a second opinion, you can head over to armstrongadvisory.com, click that Get Started button, and then you can schedule a time to speak with someone in the near future. Again, that website is armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Last segment, we were also chatting with Luke Kawa, and I said I had one more thought that I wanted to give as it relates to AI, and it's something that he said, but I want to dig in on it a little bit more, and that's, look, the AI models that you see today that are being used, they are the worst ones that will exist going forward. And plenty of us, myself included, we've been critical of, Google telling you to, go eat rocks 10 years or 2 years ago. We've been critical of, all of the dumb stuff that some of these consumer-facing versions of AI have produced. But ultimately, if you're looking at what the cutting-edge models can do now, and remember just how quickly this has evolved, and that 2 years from now, these are going to look even more different from what they are today. If you're trying to judge AI by the mistakes that were made early on, that's like trying to decide whether you're going to get on a plane today based on what the Wright brothers did. And I would not have hopped on that plane, in Kitty Hawk, North Carolina. But yeah, you better believe that I'm going to, hop on a 737 and fly to wherever, because again, basically air travel at this point is the safest way to get from from one place to another. So I do think that for those who are AI skeptical, and I'm in this category, but what I've seen in the last month I do think has changed how I think about it. I urge you not to get stuck on, well, I saw this article that it told people to do blah blah blah. I get that. And I'm also not trying to just push away the concerns about, hey, you've got, AI programs that are, trying to get into, allowing erotica for their users, and you can generate these images and these videos. No, that's the dumb consumer facing stuff that is, not good. And look, there's a lot of crap that goes along with it, but don't let that crap cause you to miss what I do think now is going to be a fundamental change in the way that a ton of knowledge work to begin with, and potentially even physical work ends up evolving, what it evolves into in the next several years and over the next decade. It's I know there's a lot of crap there, and trust me, when it continues to come up, we will call out the crap. But understand that when it comes to people trying to actually do real work using this, some of the things that have come about in the last month or two are absolutely transformational, And it's okay to still be skeptical, but skeptical doesn't mean that you just bury your head in the sand and say that there's nothing actually happening here. Let's take a quick break. When we come back, let's do a little bit of stack roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As you get closer to retirement, making sound decisions to protect your assets becomes even more important, especially with increasing cases of elder financial abuse. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A Bloomberg report from last September notes that older Americans are losing an estimated $28.3 billion to exploitation. Scam calls and fraud emails are issues to be aware of, but there are other warning signs that may not be easy to spot. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse. In it, we discuss a variety of concerns to watch out for, as well as steps that you can take to stay ahead of potential problems. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001, or you can request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined. For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round, so head to visitusvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all three on the vacation of a lifetime. The USVI is America's Caribbean paradise. Plan your winterscape now at visitusvi.com. That's visitusvi.com.
Mark, what do you have for me for Stack Roulette?
Hey, can I go back to AI for just? I have a riveting Stack Roulette item. It's so mind blowing. I'm debating whether or not to share it. But can I go back to AI for a second? I know it's one of your favorite subjects, right? And you're unusually knowledgeable. So can I hit you with something?
I'm knowledgeable enough to be dangerous.
Well, that's I'm not even knowledgeable enough to be dangerous.
Mark, you're always dangerous.
Yeah, I don't need. The baseline for me is heightened. Everybody should be on heightened alert. So, is it to me one of the potential paradoxes of AI is it's going to be life changing, like the internet was. I mean, life is different than it was in 1990 than it is today, just because of the internet and its fusion with the smartphone. But the trend in growth didn't change. In fact, it slowed down for reasons other, I assume, than that we're all online a lot, maybe wasting time. Maybe that's not a coincidence now that I think about it. Is it possible AI is transformative? It changes the way we all work. It makes some professions obsolete and introduces ones we couldn't even imagine, but doesn't actually change the long-term trend in growth.
Say that again?
So I don't. Okay, I could see AI being. I'll just use the word transformative, even though it's cliche. It changes everybody's life, just like the internet has. But it doesn't necessarily mean we're going to be any richer now. And I know this sounds ridiculous. Than say any richer in 25 or 50 years than we would have been had it not been introduced. Other things would have come along. They would have been sources of growth, not as dramatic. But the economy's the growth is driven by bigger forces. Is what I think I believe about this, because things like the internet and before that electricity didn't change the trend in growth, and I'm not sure AI will either. As much as that sounds like a contradiction.
Okay. What's your mind blowing thing for Stack Roulette, or was that it?
Okay, that apparently didn't impress you. Okay.
That was it?
No. See, this is if that didn't do anything for you,
that was fine. That was good.
I'm just,
it was B minus. You know.
Oof. A Providence College B minus, which is where I went for undergrad. That's quite weak. Okay. CBO released its budget projections today. That's the Congressional Budget Office, the non-part. Okay. And I don't know, Tucker, if we have a sound effect for a man getting skinned alive or like a devastating world-killing explosion, but not good relative to the size of the economy. And this is all this. You can get bogged down in numbers really fast. I think the upshot here for those of us that don't like dealing with like scientific notation when it comes to expressing big numbers and when percentages getting compounded becomes bewildering is that budget deficits are expected, the cumulative effect of which is the debt, expected to continue to grow. There will be no interruption because of demographics. The debt as a percentage of the U.S. economy is expected to continue to grow. It's currently at about 100% of so-called GDP. It's going to be at least 20% more than that in several years from now, and it will continue to grow at 5 to 6 of GDP a year. The question is, Chuck, when do things break?
When do they break?
Nobody knows the right answer to that. Nobody
knows
the right answer. I could say one thing. I guess we're closer to that point than we were 5 or 10 years ago, but maybe those goalposts move. I don't know.
It's because it's not physics. You know, there's not a level that you get up to where you say, okay, this is broken. Like it varies based on the specific situation, the country, the issuer. There's a wide range that you can get into here. Ultimately, it does get more and more uncomfortable, and part of it is also, look, the CBO projections, they never project any kind of recession happening, ever. They just because
they're not predictable.
They're not economists who predict recession, and so it's just okay. Here's the baseline steady state. The fascinating thing is that we're basically running recession level deficits in the absence of a recession, And so when one eventually comes, whether it's in a year, whether it's in 5 years, 10, like no one knows when it's going to be. Economists have successfully predicted 55 of the last 1 recessions. But ultimately, when that recession does come, if you're running 6% deficits annually before that, where do you end up after?
Yeah,
March? Probably like 8 to 12%.
No, we
deficits?
saw that in 2020. There was a big structural deficit, total deficit less what's being paid in interest to people going into COVID. Trump was running the economy hot, and it was enjoyable. Stocks were going up, growth was solid, but we went into it with a big deficit relative to GDP. And as you point out, emergencies happen, and then things just explode. And by the way, when we say break, like at some point this is going to break, what does that mean? It means higher inflation, higher interest rates. It doesn't necessarily mean the end of like civilization.
No,
just leaner times for a while.
Yeah, you always get the people that are like, oh, like, something's going to happen. It's like, well, what do you think is going to happen? They're like, I don't know. Well, yeah, it generally means, as Marc said, it's higher inflation and or higher interest rates, so costs go up and it's really uncomfortable and growth slows, and that's not good for anyone. But, we'll kind of have to see how it unfolds. Taking a look at markets right now, you've got kind of a mixed setup here. The Dow is up 0.1%, so is the S&P. NASDAQ Composite, though, down about 1/3%. So, again, kind of that AI trade dragging on markets right now. And even with the good jobs report, at least through the morning, not able to kind of get any escape velocity in equities. Still somewhat range-bound as they've been in recent weeks. Earlier today, you had a little bit of a sell-off going on in bonds. That's abated. The 10-year Treasury is up 1 basis point now. That's not really anything to write home about. So there's not much movement on that front either. We're going to take a break for the next 24 hours, but since tomorrow is a weekday, we're going to be back and doing another show, and you can tune into us then if you liked what you heard today.